Welcome to the Daily Exchange. What's going on, guys? I think we are up. Bitcoin touching almost $6,800 overnight. We've got to talk cryptocurrency mining today. Binance is back online. And for some reason, Neo is mooning. See you guys right after this. Welcome back, guys. What's going on? Look, we are back. We are really consolidating right now when it comes to the market. Overall theme right now looks pretty green across the board. Let's look at some prices. We've got Bitcoin trading at 6,600. Ooh, it's so nice. I think we even touched it touched 6,784 last night. A big giant green candle. We had a little bit of a down candle, then another big green candle. Lots of green candles everywhere. I love green candles. Green candles everywhere. Green candle, green candle, green candle. Binance coin has been on a downward trajectory, obviously, with the Binance hack. It is correlated, it does seem. Binance coin isn't going to buck every single trend like I always am confused about, but it is down 1%. Ethereum's up 2%, $470. EOS at $8.97, Bitcoin Cash at $760. Ethereum Classic up 4.5%. Ethereum Classic, oh my! $16.97. I think Joel, we've got to bring someone on that literally can explain this Ethereum Classic to me. Is anyone out there know any experts on Ethereum Classic? Tweet, come into the office, tell me exactly what's going on, because I'm confused about this Ethereum Classic thing. Litecoin at $84, Ripple at 49 cents. Now the big movers right now, we're looking at Neo up 14.69%. There is new information come out where they are changing the way in which they are centralized to being more decentralized. This obviously reduces their risk of them potentially being a security, potentially with the SEC. That's good news. What else is on a tear? We've got IOTA up 6%. Really interesting. Doing quite well. But the other big mover right now is ZRX up 16.92%. Back over $1. Welcome back, ZRX. We missed you out there. Potentially, they could be changing their governance and tokenomics, but it is obviously not finalized yet, but we'll see. And there is also swirling news with ZRX. They could potentially be added to Coinbase. You heard it. Coinbase for ZRX, that could be massive. Oh my God. Now, let's talk about EOS RAM, because EOS RAM is obviously one of the things. There's a great new tool, if you want to bring this up, called Market Stack D. Now, these guys have done some really cool stuff. They are a block producer, so you can vote for them. And they're tracking the price of RAM. As you can see, the price of RAM has obviously gone up quite a bit. It has started to pull back a bit. It was at an all-time high, but with everything, things pull back. It can't go up forever. The other one to look at, I find, is Fee Explorer. You can see here that now we're at 96% of the RAM was used before, but 77% now has been used. So it's pulled back a little bit there, but it does look like obviously there was a big rally before that, but yeah, potentially you can see that the price was really high, but it's come back down a bit. So EOS RAM is potentially coming back a bit, could be back on target to being for all the dApps, and I'm sure it's going to get fixed. It obviously was as high as 920 EOS or $8,100 per 1 megabyte of RAM. So it's not exactly the cheapest RAM you can buy in town. $8,100 for a megabyte of RAM? That reminds me of like the 80s or something. Obviously, Mainframe is something which is about to launch. It's about to launch on Binance. It could be doing about a 3x run. Check it out, Mainframe on Binance. Some interesting coin right there to have a look at. In terms of big movements, you can have a look at this neat little heat map that Cointelegraph has put together. Check it out. It just gives you an idea of the size of the market. You can see Ripple still seems to be bigger than EOS. Ethereum, Bitcoin Cash obviously is much smaller. And then you've got Neo just on an absolute rock and roll adventure. Cardano hasn't really done a big move, but it's still sitting around 15 cents, up 2.72%. Still an interesting coin, yeah, something to look at as just to give you a high level of what's going on. As I said, Binance coin, the one that sort of pulled back quite a lot. Awesome. Let's move on. Some new news in town. Let's talk about Binance hack and Syscoin. Binance hack and Syscoin. Oh my God. Oh my God. Holy cow. Holy cow. The 84th ranked cryptocurrency by market cap, Syscoin, has taken an absolute hammering. Let's have a look. Let's have a look at this price, SYS. Looks like it's down 27% with respect to Bitcoin. So it's obviously taken a bit of a pounding. Have you got a screenshot, Joel, for us on this? We've got a statement from Syscoin saying, Syscoin update, the debrief, obviously, about it. Syscoin is down, I said 25%. Obviously, with Binance led the alert, but there is some news, and the Syscoin outlined that it was not hacked. The Syscoin chain was not attacked. The Syscoin chain is fully operational. I don't understand why there's even any. How could there be nothing at all going on, and yet there seems to be some sort of issues? I don't understand. Anyway, Binance have said it's reset its API keys, rolled back irregular trades, and will provide fee discounts to both Syscoin traders and Binance users. That's got to be something gone down. How could there be nothing? Anyway, Binance has also said that starting on the 14th of July, 10% of all Binance trading fees will be transferred to its Secure Asset Fund for users, also known as the Sabu Fund. Sabu. Securely held in a separate cold wallet. I think there was an announcement, Joel, if you want to cut to the video we had around this, some recent news around the Sabu, I believe.
Funds are safe.
Of course, that was a bit of a wacky clip from one of our crazy crypto videos Bizunachi puts together on YouTube. Good on you, Bizunachi. Love your form, my man. Keeping the crypto fun alive during this bear market. I want to talk a little bit about this bear market as well. I think we're going to look back in time and we're going to say, do you remember that 2018, that tough time when we were waiting for all the projects and waiting for the applications to get built and everyone was scared everything was going to fall apart? You know, all these bad things were potentially going to happen and all these kind of things. And a lot of people have lost hope. I feel bad for those people because we're going to look back and say, we're the ones who made it through there. We were the ones who stuck together. We were the ones who survived the crypto bear market of 2018. And I applaud everyone else out there who's holding on to their crypto and still keeps to look for new opportunities, and all those developers and all those blockchains and ICOs that are building the future of this market, because that's what we need. Let's eventually going to stop talking about protocols and things like that. That's like talking about TCP/IP. We're eventually going to get used to that, and we're going to actually talk about the real applications that are built on blockchain. We're going to get there. It's just going to take some time. So stick in there, guys, through this bear market. It's all good. You just got to go down to go up. All right, moving on. Ethos. What is Ethos? It's our Moonwatch coin. Code is BQX. It is 51st ranked on the on CoinMarketCap. We've got an article on Finder that talks a lot about it. You can read all about Ethos. So it's essentially a place to manage your wallet's keys and verified blockchain transactions. Now, it has jumped 102% in the last 24 hours. 102% Ethos. That's a cracking coin. You can check some more out, obviously some more big movers. We've got here a site called Crypto Moons. Do check that out. You can see some coins that are preparing to moon, that are mooning, have mooned, or are falling. Do check that out because it can help you find some of these opportunities. Going back to Ethos, but obviously it's a great little new coin, but it's really on a tear right now. And you can buy it, you can pick it up on Binance and CoinSpot. There's a few other smaller sites where you can buy it, but it looks to be on a real move right now, which is really cool. You can store it on My Ether Wallet, Ledger, Trezor, and Ethereum Wallet Jax, but it's definitely one of those new coins that potentially could be bringing some adoption with its easing of using crypto. So check it out. Could be interesting. All right, guys, we have got a big session of talking about crypto mining to come up. We've got two of our experts here from Finder. Graham Cook is going to be joining us, his Insights Manager, and talk about his guide he's recently written about cryptocurrency mining. And Andrew Munro, who is a lead journalist in cryptocurrency at Finder, to talk all about cryptocurrency mining. Both of these guys have written some very important guides and very interesting stuff. But right before that, we've got an interview with the co-founder of Bankorus. He's also the CEO, Gregory van den Bergh. Gregory van den Bergh is going to tell us all about Bankorus. I believe they have finished their ICO. It's a private wealth management platform powered by AI and built on the blockchain. Check it out, guys, and we'll see you right after this for the Daily Exchange.
I'm Greg van den Bergh. I'm co-founder and CEO of Bankorus. Bankorus is the first AI-based marketplace built on the blockchain for private wealth management, specifically for high-net-worth individuals to access crypto. And we're one of the market leaders in Asia of providing private wealth management software for private wealth management firms, private banks. And currently we have over 200,000 families that use a piece of software that we've built to handle their risk, handle part of their wealth.
So why blockchain for wealth management? What is so attractive about that technology, and how does it fit in to Bankorus?
That's a great question. In terms of blockchain, I'd say two particular use cases for wealth management that stand out. The one big use case that we see is that the data about wealth management is primarily stored on Excel pages. Excel is older than me. It's 33 years old. And that often leads to a lot of problems in the system between different data that has to be consolidated. There's no uniform standard as such or uniform way of sharing particular data in a very secure and transparent way. And so, one of the reasons of the crisis of 2008 was that people just did not know what the risk was they would invest it in. There was no clear, transparent way of the entire value chain of what exactly is underlying for the products, because everything was in different data sets and different sheets. And blockchain brings more transparency and shows how everything is interlinked in a more transparent, trustworthy way. So that's one part. The second part is the concept of security token. So a security token is a token that has an actual physical underlying that is a security. For example, stock, real estate, private equity fund, venture capital fund, farmland, gold, and other assets. Now the benefit of a security token is that at present it is the most transparent as well as trustworthy way to do a transaction that is fully regulated and compliant by default based on the smart contracts it is built with, as well as it is a very frictionless and quick way of transacting in a compliant way one asset from one person to another. So just think that a lot of the compliance regarding transactions in private wealth management take a lot of time. Most of the times, people, whenever they do a purchase of an asset, they have to do KYC, show their accreditation, that they pay their taxes, prove that they're not on any blacklist, terrorist list, etc. There's a lot of AML, anti-money laundering. And so what blockchain does is, with blockchain on our platform, the Bankorus platform, you can create your own digital identity as an accredited investor, and automatically you're whitelisted for a variety of security tokens. And smart contracts will handle the compliance and what exactly is needed for that. So think about the digital identity as like a Dropbox that has, in a decentralized, secure way, storage of your passport, tax returns, your accredited investor verification, etc. And when there's a particular security token you want to buy, automatically the right data is being taken out of that Dropbox and sent to the security token provider, so that the transaction is done in a compliant way. And the security token itself will have certain addresses that will be whitelisted, so that people cannot do any transaction that's against any kind of regulation.
So Greg, what advantages does the use of AI have over humans for a project like Bankorus?
First of all, AI never sleeps. So you have someone or some system watching over you 24/7, 7 days out of 7. The capacity that AI has to process data is much higher than humans. It's trained by humans, but in terms of the potential risk that can be calculated, can be taken into account, different scenarios that can be stress tested, AI outperforms humans in the same way that AlphaGo, outperforms Lee Sedol and several of the top players in the game of Go. And thirdly, AI automation of particular tasks reduces the costs significantly. Previously, if you are a very wealthy individual, you can have teams of analysts, and you can have a very sophisticated risk system and a risk team and a team looking at different investments and a team planning, and you can have hundreds and hundreds of analysts working for you to answer questions, analyze your portfolios, calculate risk. But at some point, the lower you go, it is not economically viable for most people to have an actual built-out family office to check your investments 24/7. What AI does is it takes a lot of best practices that are being used and really democratizes these services to the rest of the masses. And that's the beauty of AI. At the end of the day, both blockchain as the main data storage and a secure way of storing and disseminating data, and AI, the main way of using that data to make calculations and to analyze certain investments. That combination of both, we think, is going to change private wealth management in general, at its very, very foundation.
All right, guys, welcome back to the Daily Exchange. We've got the famous and infamous Graham Cook himself, who's written the ultimate guide to Bitcoin mining. And we have Andrew Munro, the man himself, the crypto god, the journo behind all cryptocurrencies, the blockchain man himself. He's actually built on the blockchain. And we're going to talk about cryptocurrency mining, guys. Now, I want to bring up this incredible guide, Joel, if you want to swing to it. The Ultimate Guide to Cryptocurrency Mining Part 1 is a 4-part series written by Graham, and he has put this together. Tell us, Graham, what's this series all about? Tell us all about it.
So I put this series together to try and understand crypto mining for the first time. When I started on this research, I literally didn't know anything about anything to do with cryptocurrency or crypto mining. So as I started to kind of unwrap the box and put the pieces of the puzzle together, I realized I needed to do more research, and I couldn't find an article online that kind of explained from first principles all the way to calculating how much you can earn. There was ones that did this bit and that bit, so I decided to try and write that piece for Finder.
Awesome. And now there is a 4-part series. This is obviously part 1. Guys, each week there is another part coming out. So next week's part 2, week after obviously part 3 and 4. Graham obviously will post these on Finder. Do check out, subscribe to our newsletter, and I'm sure they'll be posted out there. We'll tweet them, telegram them. We'll probably do everything we possibly can to ensure that you know how to mine cryptocurrency if that's something you want to do. Now, let's get back to it. Okay, Graham, obviously, what is cryptocurrency mining exactly?
Okay,
let's start. What exactly is going on here?
All the way back to basics here, right? So if you think about any traditional transaction you've done when you're purchasing something online or when you're sending money to a friend in a bank or whatever, in the middle of that transaction process has always been a bank or a financial institution or a credit card company. And their role is to authorize the transaction, is to assure that the money's gone from here to here and to validate it, and that's their role in that. In cryptocurrency, that is replaced by the blockchain. And the processing power is going to be required to do that authorization, to authorize the transaction and monitor it. And essentially mining is the process by which we make sure there's computers there to facilitate that mining process by rewarding the computers that do that process with cryptocurrency, with Bitcoin or whatever you're mining.
Cool. So obviously we've got a lot of economics around this, right? So we're keeping the blockchain safe, we're keeping them validated, confirmed, the ledgers are all being spread around, the miners and transactions, everyone's sweet. Obviously, Andrew, you wrote a guide recently about potential of some of these blockchains having problems with 51% attacks. How does that exactly work with that? Like what's a 51% attack?
So if someone gets more than half of the network hash power, usually more than half, sometimes more than a third, but usually half as a general rule of thumb, it essentially lets them puppet the network, take control of it, do what they will within programmable limits. It's generally bad news for the coin itself and for anyone else who wants to use the coin. The purpose of the blockchain is immutability, decentralization, being beyond the control of any one entity. So if someone does have more than 51% of the network hash power, which is just the amount of mining power being put into the network, then it's become centralized in a fashion. And
people can just print money, print coins. Sort of. Okay.
That matters.
Maybe we can tweak a little transaction here or there and change a 1 to a 0, or a 0 to a 1 even. All right. Let's talk about this. Let's talk about the economics, right? So obviously 51% of tax, we're trying to prevent against that. We're trying to keep these chains immutable, right? So that's what the mining does. It keeps all the ledgers up to date. And we don't want any of the 51% of tax because that's going to suck seriously bad. Now the economics around this, right? There's potential to make money. And obviously early miners would made a lot of money when it came to blockchains and things like that. There are a lot of big companies that have been set up to mine cryptocurrency, in particular Bitcoin and Ethereum. And I guess in terms of the economics, Joel, there is a 3-point graphic we've got for you guys, which is really important to consider. It's number 1 is the value of the currency you're mining at any given moment. So how much is it worth? The energy cost to mine it in where you're at. So if you're in, I believe China, it's slightly cheaper.
A lot cheaper in China, yep.
Iceland, it's nice and cold. Bit hot in Australia, really, isn't it? Actually, it's kind of one of those weird days right now, isn't it? It's like middle of winter, but it's sort of got a bit warm.
21 degrees, it's going to be on Saturday.
That would absolutely suck for mining cryptocurrency.
Great for holidays, not great for crypto.
Great for holidays, bad for cryptocurrency mining.
One hot day, you fry your warehouse.
The cost of mining equipment as well, obviously, is the third and final point. Now, let's step through each of these, Graham. How would you go about choosing a currency to mine?
So the first thing you need to think of when you're trying to decide what currency you're going to mine is the equipment that you have. So essentially there's 2 different types of equipment generally used on the market. One type of currency uses units that are specifically designed to mine cryptocurrency. They're called ASICs. Cryptos like Bitcoin use this, for example. These tend to be coins that require an awful lot of processing power. So companies are manufacturing these units which have some processors and some heat sinks all together, and all they do is crunch numbers and try and mine cryptocurrency. Then there's another type of currency which is more based on how much memory is available rather than processing power, and you can use graphics cards to mine that. So if you have graphics cards, they're the currencies you want to start looking at. But the way to kind of pick it is a little bit tricky. You need to look at how much power you have at hand, and you need to look at how much power is being used to mine that particular currency. So the hash rate is what you use to determine how much power you have. Say you look at your graphics cards and your total hash rate, the power you have is 20. If you then look at the coin you're looking at, look at the hash rate for the whole coin, say that's 2,000, that means you have 1% of the total processing power of that currency if you decided to mine that coin. Once you know that, you can then just look at the number of coins produced by that network and the value, you'll essentially get 1% of that. So that's the easiest way to decide which one to mine. Obviously, you also want to factor in what you think that coin's going to do in the future, so there's a little bit of gambling involved too.
It's not quite as simple as 1% of returns, though. It's
yeah,
randomly distributed, isn't
example.
So you might need to take, an average of 100 years before you do get your mining reward. You probably can't budget for that amount of time. So at this point, you've got to kind of write off a coin as just being impossible. This is why mining pools exist, though, so they can decrease the amount of time. The average returns stay the same. It's just distributed in a more quickly.
So in a more equitable way, I guess, for more people to get involved, to increase the hash power, in order for the coin to be stable.
So either way, your returns are mathematically the same amount over a long enough period of time.
Yeah.
But you can't sit around for 100 years waiting for
a payout.
Yeah.
I think there was a coin, I think Bitcoin was mined successfully, I think it was about 4 weeks ago by a laptop. It was like a single laptop that took a whole block.
Oh, wow.
What's the reward at? The block reward at these days?
I think it was
12.5.
Yeah, 12.5 Bitcoin. So that's, keep your laptops burning. You might just win the lottery, the Bitcoin lottery, baby. You! All right. Let's talk about mining equipment because and graphics cards. Joel, if you want to bring up this this screenshot, we've got a number of different prices. Obviously, finding different prices and graphics cards. And I guess when crypto mining is used, obviously a lot of the different cards, we've put a little comparison here of where you can buy the NVIDIA cards. In Australia, this is. And what this has actually seen is a 20% increase in prices on these cards. There's obviously a delay in introducing new cards by NVIDIA as well until all the stock clears. And sales of dedicated ASIC mining rigs have also unfortunately slumped recently, which has been kind of brutal. And what do you reckon is driving that? Do you think that's to do with the Bitcoin price? Do you think it's to do with the market in general? What do you think is driving the price of ASICs down?
Well, a lot of people, there's a significant turnaround time if you're buying ASICs, usually a couple of months. It varies by company, but Bitmain, for example, will often announce their next upcoming model. Then you can pre-order, then a few months later you can get your deliveries, or limited supplies at first. So there is quite a long turnaround time to actually go from clicking the buy button to getting your ASIC miner. So a lot of people, when prices with crypto markets were going wild in December and January, just hitting the buy button, it arrives a few months later when the prices have dropped considerably.
So there's a time lag between the decision and when you can actually utilize it. That's
so with prices having been down for quite a few months now, people are understandably hesitant about actually buying it. Whereas when you were seeing the consistent upwards trend of last year, it was a much wiser purchase in many ways. There's also the usual inflation of difficulty.
I've seen one of your pieces as well on the side earlier talking about some currencies are now actively trying to push ASIC miners out of mining cryptocurrency by making it more difficult to use those particular types of hardware. So you never know, presumably further down the line, if they could try and trip you up if you did invest.
Yeah, for sure. It's already definitely happened to a lot of people. They've bought bricks without knowing it. In case of some, like the Ethereum ASIC miners, those aren't going to be that useful for that much longer, probably, with their intended shift to proof of stake.
That's true.
The mining reduction difficulties.
That's very true. Joel, do you have that? Oh, you've got the graphic. We've done that as well. Obviously, Graham, we're going to move on to the next question. Are high-end consumer cards enough to get started? So can you go out to your shop and buy a graphics card and whack it in and get kicking?
Yeah, absolutely. You can buy a graphics card, you can throw it in, you can get home, you can start mining. Whether you're going to make any money from that, though, is the key. So part 3 of the blog, which is going to come out the week after next, is going to basically, from the bottom up, present and discuss the equation that you can use to determine how much you'd make for mining Bitcoin specifically, and then we talk about other coins further down. And in that, there's going to be a comparison of certain models of graphics card and certain models of ASIC to see how long it would take you to make a profit. The problem in Australia is very difficult to make a profit because electricity is so expensive.
Okay. Andrew, do you think we've got this site here, What to Mine, and there's another site, bitmakler.net/pools. A good little, cool little site. But do you think, Andrew, Ethereum is still, I guess, a favorite among things to be mined? You've got, because in the rankings, we've got Metaverse, Loki, Nice Hash, Ethereum Classic. I don't understand Ethereum Classic. It's one of those ones we've been following it like literally for weeks now, and it just keeps bucking the trend and just keeps rallying. It's like one of those ones you just never own and you just don't understand, and you just watch it, and it's like one of those miracles. It's like you order a schnitzel and you get 2 of them, and it just comes in a double burger, and you're like, wow, I don't understand how that even happened.
You break an egg, you get 2 yolks, that type of thing.
2 eggs in a yolk. That's Ethereum Classic.
You didn't buy it, someone bring the schnitzel to the table next to you, you're just watching it.
Yeah, just literally just soaring around like a seagull with 4 wings. Ethereum, Electronium, Music Coin. Now, I haven't heard of any of this. I know this Electronium thing's big in the UK. They're doing some amazing marketing.
It's a UK firm.
Yeah. Oh. They've been smashing out. I think got posters and everything around when I was there.
Wow.
They really, really got their marketing cranking. It's like the EOS of the UK. Like if EOS is I saw them in Times Square. They had a billboard in Times Square, which is crazy, right? Like just saying EOS, I'm like, who even knows what that is, right? And then you've got Electronium I think it's like the same version of that in the UK. It's like the EOS of the UK. So here's the hash rate distribution. What I was going to ask you, Andrew, is do you think Ethereum is a bit of, I guess before, do you think Ethereum is still like a favorite of miners? What's sort of popular right now?
Well, if you've got just a small home mining setup, a dozen GPUs or so, little thing, then those small cap coins you're mentioning, the Electroniums, the everything else there, those are usually the way to go because the difficulty is still so low. Ethereum is obviously a very big name. They've got a huge amount of hash rate. They do have some advantages in the form of kind of natural ASIC resistance.
Mm-hmm.
The bottlenecks are around memory. You have to conduct a lot of different types of transactions, which makes it a bit tricky to develop ASICs for these without the community rebelling by spamming certain types of transactions, which Vitalik Buterin described as kind of poisoning the well, were his words, a natural way of bringing the community together to shove out the ASIC miners.
Wow, it's like when the Russians bent all the taps off the pipes when the Germans came in. Is that what you're saying?
Exactly like that.
Andrew, is that what you're saying Ethereum's doing?
Like
Vitalik's calling to bend the pipes?
No, just they're ready to bend the pipes.
They're ready to bend the pipes.
Should it be necessary?
They're ready to bend the pipes. Okay.
Hashtag bend the pipes.
Hashtag ASIC bend the pipes. Vitalik.
It might not be necessary.
Not necessary. Okay, sorry.
Don't put a stick on it, but be ready.
Easy on the pipe bending. Go on. Yeah, so you think Ethereum essentially could really be still a factor, still a key mining coin?
Not much longer, assuming the switch to proof of stake does.
When's your forecast for proof of stake, Andrew? Here's the man himself, the crypto blockchain man himself. What is your forecast, Andrew, of when?
I think if anyone can do it, Ethereum can. It's never been done before, changing coin with that kind of very, very active, complex ecosystem to an entirely different type of reward system. The Casper updates, the first stages, it's all going very smoothly so far. It's kind of laid over a test of the proof of stake on top of the existing proof of work system, so they can iron out the kinks, check for weak spots before committing to it as such. It's never been done before. I'd say you can expect it sometime in 2019 the latest if I had to put a time frame on it.
That far away? Okay.
Well, that's the latest. you can't rush. You don't want to rush these things.
It's true.
There's
That's going to be
a few
interesting.
$1 billion at stake.
Yeah.
Definitely. Graham, tell us, obviously, in your 4-part series, you diving into the calculations, obviously what Andrew's been talking about in terms of what's going to make money and what's not. But just take a step back from me. What is hash rate? What is hash rate?
So your hash rate basically is a measure of the number of attempts the equipment that you're using gets to solve the crypto puzzle, which eventually, when you unlock it, you're going to earn currency from it. So it's basically just a measurement of your processing power. You know, so your hash rate tells you how much processing power you have, and you can compare that to the hash rate of the whole network to see how much processing power you're kind of up against. If you want to more finely calculate exactly how much you're going to earn, though, you need to kind of delve into equations, essentially, more than just looking at the two calculation rates, which will be discussed in the blog. But the type of things you need to throw into an equation to calculate this, obviously you need to look at your costs. That's essentially the equipment that you buy, but it's also the cost of electricity, which is the wattage of all of the equipment added together. That's what your cost is. And then you need to look at your returns. There you need to factor in things like the difficulty of the currency, and you need to forecast forward if that difficulty is going to increase, as Andrew mentioned earlier. You need to look at the reward that you get for solving a block. It's 12.5 bitcoins for that.
12.5 bitty bang bang bangs.
Lucky for
and
some.
There's a block every 10 minutes.
Every 10 minutes for Bitcoin, yeah. So the frequency, you need to look at your hash rate, and you need to look at the value of the coin. So adding all those and taking away the cost of electricity, you can then determine whether or not you're going to make money. In our blog in Australia, not possible to make money with pretty much all of the mining equipment, because it's 32 cents per kilowatt hour for electricity in Australia. Very expensive. However, if you go to China, 10 cents per kilowatt hour, suddenly you're making money.
I've got a question for Andrew, but I think a reader has a question beforehand. A watcher, a reader. We're going to call a cryptocurrency baller. What privacy coins do you recommend to buy? Let's just hold on for a second. Sorry, to mine. I want to ask this question as well in terms of talking about the end of Bitcoin when there are no mining rewards. I'm interested, Andrew, in your view on that, and if you think. So they're giving you some time to think about this. This is a tough question, guys. Do you think after the mining rewards end that the fees of Bitcoin will be able to keep the blockchain in like survival? Because obviously the amount of money and the difficulty that it'll be mining at and all those kind of things. Obviously the metrics work out to be a huge loss if you're looking purely on electricity. But potentially, do you think they'll adapt it, or those kind of things? Have a think about that question before we get back to that. I'm just going to give you some time to think in your mind. But Josh, thank you so much for your question. Josh, the man himself. Privacy coin. So let's have a look at, maybe if you have a look at what to mine. Does anyone have a view? I've always seen Monero as being one of the ones. It seems to be number 10 in what to mine. Andrew, do you have any views on privacy coins and which ones to mine?
Yeah, well, Monero is arguably one of the safer bets. They have committed to this ASIC resistance more so than most other coins, and they did initially have the same algorithm that Ethereum uses, for example. It's, I believe, crypto night. So by sticking with a coin that does plan to keep forking for ASIC resistance in the future, you can arguably get better mining returns. If you're more interested in the future price of the coin itself, well, just pick a project you believe in, essentially.
Yeah. So Monero has been around for a long time, and it does have privacy coins themselves have a good use case as such. I just noticed as well, obviously Ravencoin is in there at number 12 right now on what to mine, and that's got ASIC resistance built in as well with its X16R technology. And you mentioned this as well, Graham, in terms of, I think at the Finder office here, we have our little miner burning away in the background.
Two now, we've got two rigs going, yeah. 2
rigs burning away in the wee hours of the night. Now, there is another one, isn't it that you can get, so you've got Zcash as well, which is kind of down here. And I believe, if I'm not mistaken, you can get a Dash node or a master node for about, I think it's $500,000 or something like that. And that process that's kind of mining in a way, right? Because you're proving the transactions in the node to some extent. Is that similar?
Yeah, it's all very similar. I guess you could think of that as where mining meets staking. You put towards a certain amount of capital and expect a certain amount of returns on those in the form of the cryptocurrency. They just, in the pure economic sense, mining, staking, masternodes are just different ways of creating the same incentive mechanisms to produce the same results of securing the network, reaching consensus, and creating a decentralized system. Whichever one you prefer depends, of course, on your situation. You don't need to have the huge energy costs with something like proof of stake, which arguably you can get more geographic decentralization. People in Australia can then get on that without being hampered by the enormous energy costs. But it's very transparent, a rich get richer type of model, which was very off-putting to a lot of people.
What do you think will be the biggest impact of the change to proof of stake, like on the people who are currently mining that crypto?
Well, it depends on the coin. In the case of Ethereum, one of the main things people do have to look forward to there is that initially, at least, there'll be a very high minimum staking requirement. I think the calculations are that they expect about 900 different stakers to have the funds and the willingness to actually start running nodes on Ethereum. For what are, by cryptocurrency standards, not necessarily the best returns, is 5% per year or so, I believe the plans are. If you're running a masternode, you can probably make more, assuming you got in early enough. If you are running a giant mining outfit, then you can absolutely make more than that. If you, again, got in early enough, have a sufficiently large presence in the market, cheap electricity.
Talking about electricity, so it is claimed, these studies, 0.5% of the world's electricity is used by the end of 2018 to mine Bitcoin. Now, Andrew, you've unpacked this in an amazing guide. Joel, if you want to bring this up, what does Bitcoin's energy consumption mean in the real world? Now, you've made some contentions that the energy guzzling is much less complicated, obviously on both sides of the debate. Tell us through your contentions and just walk us through your thoughts in terms of Bitcoin and its energy usage.
Well, there's a huge focus on transactions per second. That has nothing to do in Bitcoin's case with how much energy it actually uses. The energy consumption will remain the same. It's just a way of scoring points in internet debates mostly. Saying, oh, this amount of energy per this number of transactions, that kind of thing.
It's all about Reddit karma.
Yeah, absolutely.
So you're saying that potentially a lot of those calculations aren't correct because they're just running off spurious transactions per second energy calculations.
Well, the transactions per second are relatively easy to measure compared to things like the total energy consumption, which is extrapolated based on the hash rate and how much energy goes into each one calculated for difficulty. So
you're saying that the actual mathematics, the assumptions are probably not even correct, that they're not actual real measures of actually how much it costs or how much it takes.
I mean, they're probably in the right ballpark, but there's absolutely no way of getting any exact, accurate number. It constantly fluctuates day by day, minute by minute, and miners, by nature, it's a very secretive industry. They don't share how much they pay for energy. They don't give away, their over-the-counter energy deals if they go to the back door of the power plant and get a hookup there. All you can do is really estimate the exact energy cost, the exact energy expenditure.
So do you think that the mining of Bitcoin is a waste of energy?
I think for what... Yes, absolutely. Absolutely. Got a flag for that. I think that what Bitcoin delivers is not worth the energy costs, and there's no real end in sight either. It's just gonna, as long as you can get your energy beneath a certain cost, and as long as Bitcoin prices remain above a certain cost, if you can slide in that range, then you can make money, and your goal is to just consume as much energy as possible, hunt down the cheapest energy you can find, and just get as much of it as you possibly can. For an immutable network, don't get me wrong, Bitcoin is obviously very cool. It was the first coin, but there are much more efficient ways, sustainable ways of doing that. I don't think there's going to be a lot of developments quickly enough in Bitcoin's future to solve these kinds of problems.
It's a dinosaur, basically. Do we know at what point the price of Bitcoin would have to fall below for it to make it viable for people to actually mine it.
Well,
Has there been any estimate of that?
There has been 3,000 to 4,000 back in February, I believe, was the estimate for the large mining firms. But it gets complicated because as the prices do fall, people get squeezed out when it's no longer profitable for them. So the overall difficulty decreases.
Okay, interesting.
Yeah.
So it's a self-fulfilling prophecy type of thing.
Yeah, and arguably it sustains itself in that way. What will actually happen if Bitcoin prices do fall to that point? No one's entirely sure. It would be fascinating to watch. But no one's really sure.
Popcorn, everyone. Popcorn. If Bitcoin goes to $4,000, buy yourself some popcorn.
It's all about energy, though, Fred. And how you can get it for free. So I've seen articles in the news we discussed in the Huddle That Thought podcast last week, where there's some old mining towns in the US which basically have become sleepy towns. They used to be the center of a lot of productivity, around the center of a river with a big spinning mill. Nobody uses the factories anymore, but the mill is still spinning. The river is spinning the mill and generating electricity no one's using. So the mayors of these towns are now getting calls from cryptocurrency miners who they've never heard of cryptocurrency before. These guys are now moving into these towns and utilizing the free power of the river to mine cryptocurrency. So we could very well see
That's incredible.
miner towns become mining towns.
Guys, just want to say, Graham is on Hodl That Thought, which is another great podcast put out by Crypto Finder. Do check that out. It is targeted more at, obviously, people who are beginner to intermediate. It go through some great topics, great news and information about obviously what's going on in the crypto space. Do check that out. Got a question coming in here from Trevor. Trev, what's going on, man? Hey. Asking what I think of Photon. Now, I never heard of Photon. Have you heard of Photon, Andrew?
I don't think so. Maybe in passing.
I have not heard of Photon, and it's not in the top 100. PHO is its code. It's up 2.55%, trading at 4 zeros and then a 4.
Market cap of 1 million only.
It's got a little market cap. It had a massive spike and a massive crash. I am not sure what this coin does. I've never seen it. 853, it's right down there. Maybe it's something we can check out later in another episode. Guys, I'm going to have to finish up because I'm about to go and judge a competition, unfortunately. But I wanted to thank you guys and for coming in, but I did want to answer with that final question. Andrew, what do you think when the block rewards end and Bitcoin's obviously paid with only with mining fees or potentially the Lightning Network fees, what do you think will happen?
Well, there's a few moving parts to unpack there. So, number of people are actually using Bitcoin network in the future. For the fees to sustain the miners, to provide enough of incentive to keep running the equipment, they're going to have to be either some very, very high fees, which probably doesn't mean too many users, or they're going to have to be a huge amount of users paying a lot of small fees each. You're going to need to find a way to increase the block capacity for the latter to hold true. There are many developments moving forward in that way. So perfectly possible. One of the more complicated problems is that it changes the incentive dynamics of the mining. So right now the transaction fees are just a tiny, tiny part, just a little fraction of the total rewards of every block. So once you have the transaction fees being the main incentive to actually mine the blocks, you run into the problem that they vary hugely from block to block. I mean, 10 minutes per average block creation time is just the average. Sometimes one will pop up 30 seconds after the one before it. In which case, there might not be, as many transaction fees on that block. That one next block might be worth much, much less than the previous one. So now miners start looking at ways to maximize their returns in this new cycle. You look at things like, withholding blocks, not publishing them to the public ledger, scooping different amounts of the fees to incentivize other miners to build on their own new fork of the network because it's in their short-term interests. So the most extreme case is the entire thing just descends into anarchy. But it's impossible to say.
Interesting.
Wow. Cool. Well, that could be very much a slow and crazy demise upon a great edifice of the cryptocurrency space. But you know, Nokia died, so oh well. Guys, thank you so much for coming in. Do look out for the next guides coming out from Graham with his part 2 and part 3 and part 4. There's a great guide here by Joel, if you can post it out to everyone, written by Andrew about the effects of Bitcoin energy and his opinion piece. It's an incredible piece. Do check it out. It's all about hashing power, prices, energy costs. And obviously, if you want to get into cryptocurrency mining, read the guides and check it out. But I will have to leave you guys there. Do subscribe, check out, and thank you so much for watching Crypto Finder, the daily exchange where we help you change your life with cryptocurrency. I'm Fred Chebessa, co-founder of Finance. This is Graham, the man himself, the Insights Manager. And this is the man himself, Andrew Munro, the blockchain man, the crypto himself, the god, on the show today. All right, guys, see you soon. The Daily Exchange!